Hello there, welcome to World News. Asian stocks dived to three-year lows on Monday following big falls on Wall Street last week. Chinese shares took a pounding as concerns grow that the economy there is in trouble. Investors are worried that problems in China will lead to a global economic slowdown. Well, we can speak now to Patrick McGee, a journalist for the Financial Times in Hong Kong. Morning to you, Patrick. I bet you've not seen many smiling faces this morning there.
No, not many. This is a staggering sell-off today.
How bad is it?
So China's benchmark stock index is down 8.5%. It's wiped out all of its 2015 gains. The stock market in Taiwan has fallen by 7.5%. That's its biggest sell-off since 1990. And commodity prices on average are at their lowest price since 1999.
So this talk about a global economic slowdown, I mean, that is not just talk. This could happen.
Oh, yes. I mean, certainly. China is the world's second largest economy, and many people don't actually trust the numbers when Beijing says they're growing at 7% per year. And they have all the more reason to believe that now, because 2 weeks ago, China devalued the renminbi and tried to give more sense to markets as to how it will be determined, and it's fallen a little bit since then. And the underlying reason people tend to think is that China understands more than we do that its economy really is slowing, and so they're taking action.
And it shows just how much the US economy really does relate to what happens in China. Is this fall just solely down to what happened on Wall Street last Friday, do you think?
We really have a negative feedback loop. So if I was to explain Friday, I would actually point back to China. And so if I was to explain today, I might point back to the US. So we have to find a bottom at some point. But there was no new data today, really, that made things any worse. It really was just reaction to Friday. So negative feedback loop, I think, would be the main headline here.
But if they keep sort of following each other around in a circle and it just keeps going down and down and down, what is going to stop it eventually?
That's a very good question. And investors will find value at some point. Right now, we're at the lunch break for China markets, and it is quite possible that the People's Bank of China or some other authority in Beijing will announce some sort of measure to prop up the market. It was very surprising today that people woke up having thought that maybe Beijing would have enacted some actions over the weekend to help shore up the market. Instead, they didn't do anything, and that just had people fearing the worst, that maybe Beijing is no longer basing its credibility on where the market trades. And if they're not doing that, then you better take your profits now. So markets are still up in China over the course of the last year, but all of 2015 gains have been wiped away.
Are people angry with the Chinese authorities there for not making more moves?
Very good question, because if you go to the FT.com right now, you can see that an exchange operator, not for the main exchange, but for one of the smaller ones, was actually mobbed by people. So yes, I mean, this is a very retail-driven market. China's market is less driven by fund managers like you would see in the Western world, and more by mom-and-pop investors who have a normal job and then spend some of the lunch hour putting in orders. So yes, definitely. The People's Bank of China and Beijing basically had propaganda last autumn saying that people should be buying stocks and that this is the way for wealth creation. And now it looks as though Beijing has sort of given up that hope because they decided to fight a losing battle and prop up a market that was really in bubble territory, according to all sorts of analysts. It didn't look like they could win it when they began taking unprecedented action in July. And it really looks like it's Beijing versus the market. And right now, Beijing is not winning.
I know it's impossible to predict the markets, but based on what you just told us about this loop, what do you think is going to happen over the next few days? Presumably, it's going to be bad news, right?
I cannot see Beijing standing back and doing nothing. I think they have to do something. There's a lot of firepower that the People's Bank of China has in terms of cutting more interest rates. They could do that several times over. There's definitely, I mean, they have the power. They have the Forex reserves, the money to put a floor into this market and to instill confidence. It really is surprising that they haven't done anything yet. I think there's a decent chance that it's happening right now during the lunch break. And so within the next hour, there could be an announcement. If there's not, the market will just keep falling. You would think that the market would be in complete free fall. And the only reason it's not, it's down 8.5%, is that there's a downward limit of 10%. So the market actually can't go beyond that. So, you could say the good news is that the market can only fall 1.5% more today, and that gives Beijing an extra day to think about things. But the long-term view right now is a few days, as you say. I don't think I can really forecast what we're going to be like on Friday, but I would expect some sort of stimulus from Beijing.
Okay, Patrick McGee there from the Financial Times in Hong Kong. Thanks for your time, and we will continue to watch this. What is it, 3 hours now? Just under 3 hours till the FTSE opens here in London. Several more hours till the US markets open. We will continue to follow them, although, as we were saying there, it probably doesn't look like it's going to be good news in the short term, at least.